Hello and welcome. This is the educational video. In this video, I will show you very simple 3 steps on how to analyze the stocks. So with this 3 steps, we'll see whether this is a good candidate to further analysis, deep analysis or not. But at least it will give us some idea whether we should be analyzing the stock or not. So there are so many websites where you can see, but in this for this video I'm using the quickfs.net and the stock which I have picked up is Amazon. Okay, so without further delay, let's get started. So first step is just look into the trends, right? So this is the income statement. We look into the trends of the top line, trends on the bottom line, and then the middle, right? So what is the top line for the revenue? So if you can notice here, the revenue growth is from 2010 to 2019, right? This is the annual statements. Year over year is either upward sloping or is downward sloping or is plateau, right? If it is upwards, so here you can see that the trend is 39.6%, the revenue growth in 2010, and then right now in 19 it's 20.5%, right? So pretty much, if you notice, is half. The next thing is we can see, okay, what is the earning per share, right? Or you can earning per share growth rate or the net income per share, the same story, right? So you can see the growth here is 24% in 2010, while if I compare now, it's 14%. So the 10% drop here. So here is it. So it seems like the revenue dropped by half, and the earning per share is dropped by the 10%, right? Is not half, but if then you can also look into the gross profit margins, right? So this is the third. So basically it's 13.9% to 26. So this is increasing. So that's something good, right? So here we have seen, okay, so the first thing, word of caution here, okay, we can see, okay, revenue growth is declining. Okay, once the company increase, we understand, but it still is over 20%, which is very good, right? Why? We just need not only see the percentage, but look at the dollar amount as well, because in 2010 they are generating 34 billion, just make a round figure, right? In terms of the revenue, whereas now it's 280 billion dollars. So it's a huge amount of money, and still they are able to grow that with the 20%, right? So that's the one thing. Similarly, you can look into how the earning and the gross profit. But one more caution here. Just see here, one more year, right? It's not just dump into the half. Something is wrong in 2019, but as you can see in 18, it was almost 31%. So maybe it's just a bad year. 19 for sure, we know. 2020. Maybe it's 2020 once the annual statement is out, it's good. So these are the questions we should be writing as investors, okay, then to see as screening the stock on the very initial basis. Basically that's what. The second thing, once you know the trends and you are okay with that, at least right, okay, this looks good from your perspective, from the dollar amount or the percentage amount. The second step is look at the return on investment. Okay, we have 3 returns here: return on assets, return on equity, and return on investment. Most of the people know what is the return on equity, right? Basic, right? But one thing why I don't like to see the equity perspective, because if the share buyback happen, so basically it's reduce the number of is bottom denominator and increase the return. So best thing, what I think is, I look into the return on investment. And honestly, if you don't know what is the return on investment, just now things are very simple. Just Google it, type return on what is the return on investment capital, and you get, for example, you just click here, and this is a very good website, Investopedia, and here you can see the definition. So basically what it's saying is calculated used to assess a company efficiency at allocating the capital under its control, right? So basically what it's trying to say, so basically it's the net income minus dividend. In our case, Amazon doesn't provide a dividend, so divide by the debt or plus equity, right? So basically they reduce the cash amount, so because that amount is not deployed. So that's how its return is calculated. It shows formula and all. Similarly, if you don't understand anything, just come here. But if you want to, okay, let me go back to the page. So basically if you want to see how, so that's what it is. So that's the second amount. On the second, we do the similar thing, whether it's increasing or decreasing. If decreasing, how much it's decreased. So we can see it was almost 40%, then it was dropped to minus, wow, and then coming, then minus, and then and it's in double digit again, right? So that's the second step I should be looking. And we have a nice graph here. Pretty much the return on investment is very low, right? It was huge right in 2003. So it was even before they are showing here for 20 years, but 10 years should be okay, I think, or recent, how the company is doing on the recent basis. So that's number 2. Okay, now if you are okay with that one, so these are the bars, right? So you can either stop but I suggest at least to follow these 3 steps, not just neglect based on the numbers. The number 3 step is go to the Yahoo Finance, and these are all free website, right? So just search for the company and come on the profile page, right? In this profile page here, basically you can see the company profile. Okay, read the description, what is this all about. Okay, so that's what it's important. Either the company is what kind of business it is, or for Amazon we know that's okay, at least it will give some idea, rough idea whether why we need to do this. For sure, this is investing in a company is not like just not we are doing every day, right? So we are not traders, we are investors. So we need to understand what business we are trying to buy, where they are making the money, and also where our circle of confidence is. That's what I'm trying to do. We understand this at least a little bit. Have you used their services? So these kind of that's what Peter Lynch says in one of his books. Try to experience it before you just go and say, okay, the stock is lower or high, right? So it's give the confidence. So for the Amazon, most of the time we have used the services and all, but they are in other. So that's the second. At least you should have some understanding of the business. So that's number 2. Okay, number three for my side is, I always, if you go into the same page, just go a little bit on the top. These are the key executive, right? And here there is a website as well. You can go and check on the websites to see how it's look like. So that's still under 2. But number 3 is see who is their CEO, and all right. So that's the CEO. How much money he's taking out of the business, right? So that's very important. Jeff Bezos, is very famous. No need to an introduction. He's the founder, so that's a cherry on the top. And he's only taking 1.68 million, right? As you can see as a pay, which is okay, right? The amount of the work he's doing is amazing. And if the company, the person name, which I don't know, I just quickly Google the person name and try to see how much experience he has in running this kind of industry, right? So that's I'll also do that, right? So these are the 3 key steps, because the management and the CEO is the driver of the company, right? He does capital allocations. So what I'm trying to say here is he allocate where the money should go,
So whether he's a short-sighted mind or from the long-term perspective investment, right? So to we have the better return, no matter how much good asset is, no matter how good returns are, if the person is not doesn't know how to drive, you, even if you give them the Porsche or Ferrari or any excellent, or Tesla, any other, or let's say the Ferrari and a race car, right? Super good and all, luxury wise, everything. But if you don't know how to drive, doesn't make good decision, it won't perform better. So that's one of the reason for me, when I do initial analysis, before even I go to the financial and all, at least I'll try to see these three things. So hopefully you like it. If you like this kind of a knowledge, do please do a thumbs up to this video and subscribe to the channel if you haven't already done so. Okay, thanks for watching and see you soon in next video. Bye for now.